All right, traders, the bears just got trapped and the macro is attempting to flip from being bearish to bullish since we broke above that key resistance 393, 394 zone. Within this video, I'm going to be showing you how to trade the best setups at the best prices. Fridays are known for being my best trading days. In terms of today, I went 3 for 4 scalping. I did not get trapped in puts. I scalped like a sniper, and I even focused on calls for the vast majority of the day rather than puts. And I'm going to explain to you on why that is, utilizing confirmations instead of blindly trading a plan based off of a price and key level. So I'm going to be breaking down today's price action, which is what you're going to be able to learn from to profit in the future with these trading strategies. And I'm also going to be breaking down my plan for Friday, and I'm going to explain to you on how the macro is now shifting, right? So basically that macro analysis that I've given out where I was super bearish is now something I'm not interested in, and it's irrelevant because they broke above the key level. So I no longer feel the same way, and I never swing traded puts. And the reason why I never decided to swing trade puts is because if you look at the daily chart, it kept bottoming at this support channel, which is bullish. It kept forming bullish trend reversal candlesticks. It kept breaking out, and it kept forming higher support. I'm not going to short a stock at support and swing trade if it's forming green bullish trend reversal candlesticks. And a lot of news has altered things as well. So let's start off with today, and then we're going to go into recapping the trades, and I'm going to give you the trading plan for tomorrow. I'm telling you, this trading plan that I have, this is going to be absolutely phenomenal. This is going to be a really good one. So in terms of the trading plan that I had given out yesterday, it was to buy put options for a scalp, which is where you get in and out within minutes. So within minutes, you can look for like a dollar move. If SPY drops $1 and you're in puts, you get out, you sell. That's what we do here. We don't hold hopes. We scalp. We trade like snipers. We get in, we get out. So in terms of the trading plan, what was the trading plan? It was to buy puts at 2 levels and sell for quick profits into the dip. And the trading plan that I gave out worked because we don't hold, we scalp like snipers. You could see right here, there was a gap to fill above at 389.35. This is one of the levels where I told you guys SPY can have a gap close reversal and you could try buying puts. It's not the best level though, so I swayed away from it. But if you look in terms of the morning, it formed lower highs, which is bearish, and it sold off. That's kind of a bearish confirmation. So if it's going to rip right back up to the gap with that nice bearish confirmation right there, and then you have this trend reversal candlestick right here, you buy puts at 388.50, and as you could see, it dropped all the way back under 387 support very, very quickly. So that trade idea in terms of the plan that I gave out worked, and that's a phenomenal scalping opportunity. If you're going to try to say that, support is going to crack at 387 and you're buying puts at the peak for the gap close reversal, then you're greedy and you're a hog who deserves to get slaughtered in that sense. We don't hope for support to crack. We sell at support and we buy puts at the peak. In terms of my second trading plan at the best level, it did work, but it didn't work as well as this gap close reversal, unfortunately, but it still had the drop. The second trading plan was to buy puts at $391.73 to 392 zone. As you can see, $392 was the exact top right here, and it dropped all the way to $390.80. These are great scalping opportunities. Anybody who knows my style of trading knows I get in and out of my trades within seconds to minutes. If it goes $1 in my favor in terms of the SPY's price, I get out, I sell, I lock in gains, and I cut my losses very quickly, like a 30, 40 cent move against me, right? So I gave you guys the best entries, and they worked if you scalped them. I completely understand, though, in terms of the bigger picture in the macro, I was wrong, but I did not swing trade puts. I never swing traded puts because we were at support and it was forming bullish trend reversal candlesticks. You have to use, especially if you were swing trading. So in terms of my day trades, sometimes I will use confirmation, sometimes I won't use confirmation. It depends on how the price is looking, how things are playing out, what kind of trading setup it is. It depends. That's a whole nother video lesson. But in terms of swing trading, I always use confirmation. You have to always use confirmation if you're going to hold something for a long period of time. You need to use the best confirmations in the game, because if you're holding, that means you're going to be exposed to bigger losses and bigger wins. And I don't like losing big, so I need the best confirmation in the book if I'm holding. If you look at what it was doing the same thing it did last time where it bottomed and started to skyrocket. It just kept chopping up at the support channel, forming bullish trend reversal candlesticks on the daily. And I said, I'm not going to be swing trading it, even though I think the macro is bearish, because it's forming bullish daily candlesticks, right? I don't swing trade puts at support when there's bullish trend reversal candlesticks. I don't swing into big green bullish candlesticks. I wait for gaps to fill at bearish confirmations, right? So that's why I decided to swing trade. I'm going to be going over the macro towards the end of this video, but let's just break down this chart, man. So in terms of today, I sat out and I skipped the morning. If you guys watched yesterday's video, I did like this level, but it was going to be a tough level to play out, in my opinion, so I swayed away from it. I didn't do anything here. The strategy did work, but I didn't like the level. In a sense, I just stayed away from things. I did not trade in the morning. With that being said, I skipped this trade when it hit 392. I didn't trade it as well. Wasn't liking it in a sense as well. The price action was overall choppy, but the main reason why I decided to just not do puts is because of the 30-minute chart. The 30-minute chart was very, very strong. You guys know the previous resistance of yesterday at 387 had a breakout and it reacted as support, which is extremely bullish. Therefore, if it gaps down, you're not gonna wanna try to do puts until it fills the gaps. And we had a gap at 389.30 and we had a gap at 392. So looking at the 30-minute chart, it looks very, very green and bullish. And, it broke above the gap. It broke above the level that wasn't the best level, but it did work the first time. This 389, the top of this resistance channel had a breakout and then it reacted as a support level. So right here, it had a breakout above the channel, above the highs. It pulled back, and then you could see the bottom of the pullback was at the previous resistance. Very bullish, higher support, very bullish. This right here is all confirmations if you are in puts to get out. How do you confirm if something's bullish? If it breaks above resistance, and then when it pulls back from the breakout, it is not going to be a fake out if it starts to bottom at previous resistance like it did, or if it just forms higher support like it did as well. If you're holding puts past like 389.30, then you can just write this down. I deserve to lose big. If I short a stock at resistance and then it pulls back and it turns previous resistance right here into support, that's bullish. And if I still hold, you cannot risk more than that resistance right up here towards 389.30. If you risk more than that, then the bear trap is set. The bear trap is set, and they're going to run this because previous resistance is now support. So that's how you can determine that by waiting for it to see where it bottoms, see if it bottoms at previous resistance. And if it does, then that's bullish. Now, this is going to be the key level in the trading plan. So write this down. This is going to be key. I'm telling you, if you take advantage of this information, you should do very, very well. So write this down. Whenever it happens, it happens. The macro is attempting to shift from being bearish to bullish because we broke above 394. So where was the crazy bear trap triggered? Where all the bears got screwed, they held, they didn't cut their losses because they don't listen, they don't understand how price action works, they don't understand if something breaks out and then it pulls back, it forms higher support, and if it retests that resistance from where it had that drop, then it's going to try to run right. They don't get it. They just hold their hopes, and they like losing big. That's what they enjoy doing. Where was that even triggered at? It was triggered right here. This is where it was triggered. At this level right here. So I want you to write this down. $389. $389. This level right here is where the major bear trap was triggered today at resistance. So when you see the SPY drop back to 389, this is where we're going to be scalping calls. So we're going to wait. We don't know when it's going to happen, but we're going to wait for it to drop back to the 389 level, right? To the previous resistance level to see if it reacts as support, that 389 to 388.50 zone, right? So you could just look at the 30-minute chart right here. You had all the resistance towards this 389 level. This is what we were looking for. Very, very simple. This is where the bear trap got created at 389. So we wait for it to drop back down and retest. Once it retests, we look to buy the call options. Look for a support level to form, look for a small bounce, look for a consolidation, or you can just try to get in with starter size without a confirmation to try to get the best level with a stop towards like 387.80, right around there. So you're looking to get in towards 389, and the stop would be towards this like 387.80, 388 level. You can right around that zone would be the max pain on that. So that's my first trade idea, is to buy calls at the previous resistance level where the bear trap was created today in terms of big upside potential, right? Now, in terms of the trades that I ended up making today, this was very bullish on the 30-minute, so I just swayed away from puts, swayed away from puts because it was bullish on the 30-minute. And with that being said, I decided to wait. I just decided to wait. So one tip I can give you guys is to just wait till towards the end of the day. Now, the thing about the best setups and what I teach is you're going to notice the best setups at the best prices with the gaps, they tend to trigger in the morning. It tends to happen at market open, sometimes in the middle of the day, rarely during power hour, but it tends to happen at market open. But in terms of the setups that are good, but not the best setups, you're going to want to wait. You're going to want to wait to trade those past 2 p.m. I think. I'm telling you guys, if you just wait for things to develop and wait for bear or bull traps to actually get created instead of trying to predict things or confirm things, it's a lot easier in a sense. So, I mean, I decided to buy calls at a much higher level, but there was very bullish confirmation. This is why I decided to buy calls. You could see right here, look at this pattern we have here. See how the SPY has this like 3 sideways candles right here. See how the SPY has this 3 sideways candles right here. What does it do after that? 3 very bullish candlesticks on the 30-minute chart. I saw that forming, top G saw it forming, and we also noticed it was bottoming at the previous resistance. The previous resistance was at 394. It had a massive breakout to 396. It dropped back to 394, turned it into support. 3 slanted red candles, 3 slanted red candles. What happens next? The 3 next candlesticks go super bullish. The 3 next candlesticks go super bullish, right? So if you would have just waited the entire day, didn't do anything, you would have been in at the best price, but you had a very nice confirmation and a very nice pattern to make a very lucrative trading return. So another tip I can give you guys is one advantage to waiting is you get to just see who gets trapped and if the trend's bullish or bearish. You don't have to predict anything. You don't have to try to confirm anything. Obviously, you have to confirm later today when you trade. But if something's more developed and a bull or bear trap gets created, bag holders get created, it's a lot easier to just see who's in control of the trend and then wait for a nice confirmation, a nice level to take advantage of it. So if the trend is super bullish, where the SPY keeps breaking out and then it turns previous resistance into support, like it did at this 387, and then it turns previous resistance into support, like it did at 389, we know it's bullish, and if it's breaking above all the gaps and forming support, we know it's bullish. So you just wait for it to have a nice drop towards previous resistance, and then you buy calls. Like 389 would be a phenomenal level for calls at that previous resistance level, which was really even barely tested. It kind of just had a breakout in a sense. But in terms of the patterns, the bullish pattern was this: 3 slanted red candles, 3 slanted red candles at previous resistance. Previous resistance was 394. It went all the way to 396. If the trend's bullish and we drop 2 points with 3 slanted red candlesticks, there's my pattern. There's my price. Previous resistance should react to support. It's going to be calls. We crushed that. That was pretty much the main trade that I had today. I had 3 trades, the vast majority of them. 3 of them were in calls. 1 was in puts. I tried puts at 395. It dropped to 394. I sold for a win at like 394.70 from out of the money to in the money on those. Made a nice little win on that. But the Boehner trade was buying calls. It's because the trend was bullish. All of the gap levels were reacting as support. The bears got trapped. I waited. I used confirmation. Sometimes I don't use confirmation. I just get in. But if whether I use confirmation or not, I'm going to get out quickly. If I'm buying puts at 392, my max pain is like 392.50. I don't hold. If I'm buying puts at 389, my max pain is like 389.50. Like I don't hold. Especially if I'm getting at the best levels possible, I'm not going to be risking a lot. If it can't work at the level, then a major trap is going to be set. And I'm not going to be the one who gets trapped because I understand how price action works. I understood enough to just not get in. Because the 30-minute candles were just strong and bullish. Even though scalping, it would have worked. I would have banked if I tried puts at those levels for the first time. I would have been in and out for very, very nice gains. But I decided to wait, and then I noticed the bears got trapped, and then I noticed the trend was bullish. So I told myself, okay, this just broke above 394, and it's at 396 now. So if it drops back to 394, previous resistance is going to try to react to support. So that's what was in my mind during power hour, and then I looked at the pattern for confirmation. 3 slanted red candles, 3 slanted red candles, and then what do? You buy on this third candle when it closes. You buy in this third candle when it closes, and then 3 bullish candlesticks, and then 3 bullish candlesticks. You see that? So we were buying calls at 394.60. I added at the lows at 394, and then I sold those in the money. I was buying them out of the money. 395 strike. I sold them in the money when the price went above 395. I sold at 395.10. I was still bullish, but I get out early because that's what I do. I'm a scalper. I do not hold these very, very long. I get in and out like a sniper. And I use hot buttons. I'm using hot buttons where all I have to do is click one button. The quantity is already filled in. I'm using a market order, and I'm just trading SPY options. The liquidity is high. The spreads are thin, so I can do this. I click the button. I click buy. I click sell. I get filled instantly. I get in and out, and I use Thinkorswim to do that, right? I don't go using Robinhood. I don't go doing limit orders. I don't go doing all this nonsense. Within one button, I'm in, and one button, I'm out. Very, very simple. In and out scalping like a sniper, instant fills. It's instant. So with that being said, that's why I bought calls for the bullish play in the 394s, and that's why I was bullish up there. In terms of all this, I stayed away from it. The puts on scalps would have worked. I didn't do calls at any of these levels. Will, why didn't you do calls at any of these levels? They were lower and better levels. Reason why is I didn't see any strong confirmations on the 30-minute chart. I'm sure there was strong confirmations on the 1 minute and 5 minute. Some of the best confirmations you could use are going to be on that 30-minute chart. But I just swayed away from it. But I know how price action works. I know if they break this above 389.30 and turn it into support, higher support, and it breaks out, I know it's going to fill the next gap at 392, and I could try to ride that wave, but I didn't do it. But I know how price action works. I know if 392 breaks out and reacts to support, they're going to send it to the next resistance level at 393.50. I know if it breaks above 393.50 and turns into support, then it's going to go super bullish to the level that I gave you guys in the 2 videos ago. If we break above this channel right here, this 393, 394 level, then it's going to go to the next previous support level, and it's going to try to react as a resistance for the short term right here at $397 zone, right? So I know where the price is going. Doesn't mean I'm going to take advantage of that if it looks bullish or bearish at those levels, because that would just simply be trading on price action. Using confirmations is very, very good. I found some of the best confirmations could be on the 30-minute chart, in my opinion, utilizing the 30-minute chart, because the 30 minutes is going to help dictate the next 30 minutes, which is very, very good for a scalp. 30-minute direction is more than enough I need for a scalp personally. All I look for is a couple of minutes. That's why I also use the 1 minute and 5 minute chart. But for most people, it's probably just best to really focus on the 30-minute chart. But for quick scalping, 1 minute chart, 5 minute chart is essential. I mainly just use the 1 minute chart though for my quick scalps. And then I use the 30-minute chart for like patterns and directions on where the next 30 minutes will actually be, right? So if you want to have really high standards, you can use 30-minute confirmations at key levels. If you're using the 1 minute candlesticks, those are fine too, and that works. You just have to get in and out quickly when the trend flips, right? If you're going to buy puts into a green bullish candlestick, you have to get in and out quickly. It's bullish. It could flip bearish, but you're getting in when it looks super bullish at a good level. So it's not confirmed on the 30-minute chart, meaning you cannot hold it. You cannot hold something that is not confirmed. Now, if you see a 1 minute or 5 minute confirmation, then there you go. It's a 1 minute, 5 minute, 10 minute trade. It is what it is. But if there's no confirmation on a 30-minute chart, you cannot hold more than 30 minutes. So write that down. If it's confirmed bullish on the 30-minute, you can't hold puts for another 30 minutes. You're going to get absolutely wrecked. So that's the game. In terms of what I'm focusing on from here is very, very simple. I'm looking to buy call options at 389. Whenever it happens, it happens. So in terms of this video, the reason why we're interested in buying calls at 389, it had a massive breakout, and that's where the bear trap got created. So whenever it decides it wants to drop back down to 389, whether it's tomorrow, whether it's next week, right, we'll have our price alerts set. We'll be prepared for it. That previous resistance level where the bear trap got created is going to try to react as a support level because it had a massive breakout. And that's a great level because it had a big upside potential spike from that level. So calls at 389 is something that I'm going to be monitoring. In terms of other levels that I'm keeping an eye on is our new best level to watch is at 396. What do we know about 396 and 397? So here's what you need to understand, right? The macro has attempted to flip from being bearish to bullish because it broke above 394. So in order to go bearish again, it needs to break under 394. But I'm not as interested in that idea to buy puts yet. There's still no bearish confirmation on the daily chart. If we get to higher levels with bearish confirmations, I'd be more than interested, but I'm still not interested in swing trading. In terms of swing trading was what I meant by buying puts yet, right? So just understand, the macro is attempting to flip bullish. So the bulls are taking some control. There's no reason to be swing trading puts at the moment. And this is the level you need to be monitoring. You need to be monitoring this 397 to 396 zone. I need you to keep an eye on this zone. So to understand what this zone is, this is a previous support level. If it reacts as a resistance, they're going to drop this back down to 393. If it reacts as support, they're going to break this out all the way to $400, right? So it's make or break now. It's make or break at support. We know that the bulls are showing up. They turned the top end of this channel, previous resistance at 393, into support, right into the close, and then they spiked it higher. So we know the bulls are showing up, and we know the macro is starting to flip, right? So this is what we know. Now, it's approaching this key 397 level. So basically, if 396 holds, we're still bullish. The previous resistance is at this 395.50 to 396. If that zone holds, we're still bullish. If it cracks and reacts as a resistance, we try to flip bearish and it tries to crack 393.50. I don't hope for support to crack. If I'm bearish, I buy the put at 396, I sell at the support. I don't sit here and say, okay, support's going to try to crack. No, because that's when it could start to spike again, right? I'm not going to give back my gains. If I'm shorting this at 396 and it drops the previous resistance at 394, I don't hold and say, oh, I think it's going to crack. No, I sell. I get out automatically. No confirmation. I just get out. I literally just exit at the price. I don't even wait for it to look bearish or bullish. I just exit because I know they're going to instantly try to spike it back up because previous resistance is going to try to react to support. I take my gains. I'm not greedy. I don't aim for multiple targets. I have one target. So that's what you need to understand about scalping as well. So yeah, we're going to be monitoring 397 and 396 and $389. Those are the only levels I'm interested in. I'm interested in a 396 gap and 389. Those two levels is what I can give you. We're going to absolutely crush it tomorrow by trading the best steps to those prices. If you want to be a part of Trader Society, it's going to be the first link down below in the description. If you want to be a part of Trader Society, guys, it's the first link down below in the description. We're going to be raising the price to Trader Society. The end of this month, we're going to be raising the price. Now is the best time to be joining. You can surround yourself with a network of traders who is focused on mastering trading the SPY. SPY is the most lucrative one to be trading. It has the most liquidity, it has the most price action. It's highly predictable with the trading strategies, and it works very, very well. So if you want to get in and out like a sniper, trade like a scalper, right? Where you get in and out, and I'll show you how to set up the platform and how to master the scalping strategy. It's going to be the right program for you. You can surround yourself with people who are consistently making money every single week. And you also get access to the video lesson library, the educational suite, the Discord server, the live trading streams, the voice channels. It is all included. With that being said, I will see you guys tomorrow live at Market Open. If you want to join, it's the first link down below in the description. It's a one-time fee and it's lifetime access. I will see you guys tomorrow.